It is Monday, October 7th, I believe, just about a half hour after the market opened. So it's about 10 o'clock in the morning, and we have, shut my Xbox, we have oil starting the day up and continuing where it left off from Thursday and on Friday. So obviously, markets closed over the weekend, so not much going on in oil over the weekend, but as you can see, well, this is the daily chart, so each one of these candles equals 1 day. So today we're up already. How much are we up today? How much are we up today? Oil's up over 1% today, and means that my leveraged oil stocks are up 4% today. So basically, I want to go over why I purchased oil, my thought process for the trade, and let you guys know why it's important to buy on support and sell when you're heading towards resistance. So last Thursday, which was October 3rd, I started scaling into this position, and it was in UWT, which is the 3 times leveraged position for oil, for crude oil. So I was buying, my average price is $9.17, which is right around here. So I didn't quite catch the bottom of this wick, but it's good enough. It's a good entry for this position, and you can see we are at almost $10. So my position is up quite a bit, almost one whole dollar. I think about 50 shares, so I might be up $50 on this trade. So let me go back to oil and explain to you guys exactly why I purchased on Thursday. So you can see on my screen I have this green box that's going alongside the bottom of this chart here. Now this green box starts on January 30th, right here, or the beginning of February, however you want to do it. But the only reason I put this green box here in the first place was just to highlight that we crossed $50. See, you can see on my right hand side here the price is here. I'm going to put a call out anyways, just so you guys can see, but I'll put here $51. Okay. So this green level is the $50 range. So you can see in January we crossed and we tested when we bounce. Okay. In February we came back to the $50 range and we bounced again. Now we're going through March, April, May, still above that $51 range, and we started in this downtrend. So we're going down, down, down. This candle right here is the June 6th candle. You can see we came back into this green area, into this $50, $51 area, and we had a short bounce. Rejected, came back to this $50, $51 area, and had another bounce. Now we're in June, July, August. Now August, the beginning of August comes around and oil starts slipping again. We come back to this $51 to $50 range and we bounce again. This is what you call support. When you have a price level that gets tested over and over again and keeps bouncing off of that support, then that's a really good support line. And that means that you can only assume that the next time it goes back to that range, the same thing is going to happen. Because in trading, you go by patterns. So if a stock goes down to, like in this scenario, $50 bounces, $50 bounces, $50 bounces, you could assume that the fourth and fifth time is also going to bounce. So that's exactly what I did. We are in September now. So this was the bounce in August. We are in October, and we went back into that $50 to $51 range on Thursday. So when that happened, I said, all right, probability is the chances are that we're going to see another bounce from this area, which means that you want to capitalize on the previous patterns that you've been watching and act on it. So what I did was I went to my UWT position, and I saw that so basically this stock is $9 right now. It's not denominated in the same way that oil is. So oil is right now at $50. This stock is at $9. You don't pay attention to the actual price. You just pay attention to the price action. So I knew oil was going to react, so I bought into the leveraged oil stock. But not all the time are these charts going to look the same. On oil, this move here was down here because we had tested 3 or 4 times. So instead of the $50 range for oil, for UWT, it's this $8 to $9 range. So every time price was coming between $8 to $9, reacting. $8 to $9, reacting. So yeah, I would have sold this position if oil would have broken below this range. So you want to set your buy orders in this green box, and if price ends up below this area, then that means that the support has been broken, and that means that it's probably going to keep falling. So you want to sell your orders when that support breaks. So that's it for the lesson. Basically, support is when price reaches a certain price level and reacts on it. And then you want to be buying your positions when you hit support. You want to look at the pattern and see, oh, 50, 50, 50. Each time it goes to 50, it reacts. So that's why I made the trade. I'm still in the position. I will stay in the position until I see better returns because I'm only up like $50. But I think oil can definitely go back up to $56, $58. And that means that my UWT position can probably still run another 20% because oil really got smashed, and UWT from the April highs is 150% away. So these are very volatile stocks, but the risk, the reward is worth it in my opinion for the risk that I'm taking. But I'm also a more experienced trader. So if you don't want to take that risk, there are also unleveraged stocks that just give you the same 1-to-1 ratio that oil does. So that's about it. Thank you guys for tuning in. Hopefully you learned something from this video. And later on today, I'll also be making a Bitcoin video because price action is developing on Bitcoin, and I want to keep you guys updated with what's going on there. So thanks for tuning in again, and see you next video.